Right now, investors are dumping Microsoft stock because they're terrified that AI is going to destroy the software industry. Meanwhile, billionaires like Bill Ackman just quietly dropped over $2 billion into the stock. So who is the one making the mistake? In this 10-minute video, I'll break down 7 reasons why the market has completely mispriced Microsoft and why it might be the cheapest AI stock today. Hi, I'm Teddy, and I've been investing and trading for over 10 years. I've made a lot of costly mistakes along the way, and my goal with this channel is to provide you with analysis and tips to help you avoid them. If you find any of this helpful, I would greatly appreciate it if you could like and subscribe. Now back to the topic. Before we get into the top 7 reasons why Microsoft is the cheapest AI stock today, let's set the context. So, why is Microsoft stock falling right now? Microsoft and other software companies have been poor performers over the past year. The financial media has a catchy name for this panic, the SaaSpocalypse. The market believes AI will completely cannibalize traditional enterprise software. Why would corporations keep paying for a Microsoft software suite when a cheap AI native startup could do the exact same job? But the deeper fear isn't just replacement, it's a brutal margin squeeze. Historically, software companies enjoyed untouchable profit margins in the 80 to 90% range. You build the software once and you sell it 1,000,000 times at almost zero extra cost. It was a flawless business model. Then Gen AI showed up and ruined the math. While this might be true for many software companies, it is absolutely not true for Microsoft. And here's the first reason why. Many think Microsoft is a dinosaur software company, but it's way more than just software. What if I told you that traditional software isn't even half of their revenue? In fact, software only makes up 40% of their revenue. The company calls this its productivity and business processes segment. This includes the software everyone uses daily, like Office 365 and LinkedIn. It also includes their major ERP software called Microsoft Dynamics. This is the system that giant corporations rely on. The media wants you to believe that AI startups are stealing Microsoft's customers overnight. But corporate America doesn't switch operating systems on a whim. Look at Microsoft Dynamics. Generally, core systems like this have a minimum lifespan of 10 years. Tearing out a foundational software platform like Dynamics takes at least over a year of painful, expensive downtime for large companies. Corporate execs simply don't authorize that kind of disruption just to try out a trendy new AI tool. And Microsoft's latest quarterly reports back this up. Last quarter, Dynamics grew its future contracts 99% year over year to a staggering $627 billion. Read that number again. You do not grow 99% in future contracts year over year if your core software is being replaced by a cheap AI startup. In other words, corporations are doubling down. They are staying exactly where they are and waiting for Microsoft to bring AI features directly to them. If the SaaSpocalypse were real, you would see contracts shrinking. Instead, we are seeing the exact opposite. You've seen how sticky the traditional software business is. Now let's talk about Microsoft's secret AI monopoly. This segment is called the Intelligent Cloud, which also makes up roughly 40% of Microsoft's revenue. It's the reason the company is practically bulletproof during the AI revolution. At its center is Microsoft Azure, which generated $75 billion in revenue last year, and despite its massive size, is growing at a staggering 40% per year. Let that sink in for a second. Azure is a leader in providing AI cloud computing services. It operates in an oligopoly alongside Amazon and Google. If a company wants to build a new AI app, they have to rent computing power from one of these 3 giants. There's simply no other way to do it at scale. So in other words, this AI revolution wouldn't take place without Microsoft's cloud services. This brings us to the famous partnership with OpenAI. The media loves to obsess over this relationship, often getting the details completely wrong. Microsoft originally invested heavily, eventually taking a 49% stake in the ChatGPT creator. Today, that stake has evolved. Microsoft now owns exactly 27% of OpenAI. Now, having an AI cloud monopoly growing at 40% per year, along with a 27% stake in OpenAI, one of the largest AI companies today. Does that sound like a dying software company? Having a monopoly as an AI cloud provider is great, but what about the need for custom CPU and GPU chips to power their Azure cloud services? Historically, Microsoft had to spend billions and billions on rising expenses for NVIDIA GPU chips to power its Azure cloud, which had the market worried because it meant eroding profit margins. But Microsoft is tired of paying a premium to a middleman just to run Azure. Instead of buying NVIDIA chips, they're aggressively designing their own. They created custom silicon, namely the Maya 100 AI accelerator and the Cobalt 100 CPU. By using its own homemade chips inside its Azure data centers, Microsoft cuts its hardware costs drastically. They're quietly insourcing to protect their elite 46% operating margin. Not only this, Microsoft just announced that it's partnering with NVIDIA to create custom chips for its Windows PCs. Instead of sending every AI request to an expensive server in the cloud, these new PCs process the data right on the device, which pushes their costs down even further. Now, if Microsoft is designing its own chips to power Azure and for its own PCs, essentially bringing this in-house, does that sound like a company whose profit margins are about to be crushed? The market is terrified of how much money Microsoft is spending on AI data centers. They're projected to spend up to $190 billion in Microsoft CapEx over the next few quarters. The cost to power their Azure cloud services isn't cheap, but why are they spending it? Because the demand is completely relentless. Azure is currently capacity constrained. When Microsoft opens a new data center, it's immediately maxed out by Fortune 500 clients running AI workloads. If any normal company announced a $190 billion build-out, it would instantly drown in debt. But Microsoft is not a normal company. Despite spending that massive fortune, Microsoft is expected to still generate at least $30 billion in free cash flow per year. This keeps them insulated for many years, far from having to issue debt, ensuring they stay competitive and keep funding the biggest infrastructure build-out in human history. Now tell me, does a dying software company generate a massive $30 billion in free cash flow per year? Hey, quick side note, my goal is to provide the most transparent research so investors of all levels can make better decisions. So if you have an extra data point to add or suggestions for future topics or ways to improve these videos, please drop them in the comments so we can all benefit. And if you found this helpful in any way, please like and subscribe so I can continue making them. With that said, let's get back to the topic. Right now, the market thinks of Microsoft as a slow-growing legacy company. Why? Because some investors think they are relying entirely on OpenAI and other external AI models to power its future. But this is a huge misunderstanding. Under the hood, Microsoft has quietly built its very own AI reasoning model called the MAI-1 series. Their plans aren't to keep renting AI brains from others anymore. They've created their own, which is vastly cheaper to run. Looking at their newest computers, Microsoft just announced a new line of Surface laptops, powered by RTX Spark superchips. In simple terms, they are putting supercomputer-level AI power directly into everyday laptops. This is a game changer for businesses. Instead of paying expensive fees to run AI over the internet, workers can run complex AI tasks right on their laptops. This saves companies a fortune and could trigger a massive wave of people buying new Windows laptops and PCs. It's no wonder the company is forecasted to grow revenues 15% in each year for the next 5 years at least. Microsoft has experienced a software is dying narrative before. If you traded through the early 2000s, you remember the panic that free open source software like Linux would bankrupt Windows. Then in 2013, analysts screamed that shifting to cloud subscriptions would permanently crush Microsoft's profit margins. And in 2016, think back to Slack chat. The market was worried that it would disrupt Office 365 features. But Microsoft simply built Teams, bundled it into Office, and won the war because they already owned the customers. Every single time, the market predicted an extinction event. Every single time, Microsoft simply weaponized the new technology, crushed the startups, and drove its margins to all-time highs. Today's SaaSpocalypse relies on a huge misunderstanding of enterprise tech. A GenAI chatbot is just a reasoning engine. By itself, it has zero memory and zero context about a company's internal operations and resources. To actually be useful, an AI model must plug into a company's internal records. Fortune 500 companies will never hand their internal financial files over to a trendy AI startup. but with Microsoft, they have been for over 30 years. In other words, CTOs and CEOs don't buy software just for cool features. They buy it for legal compliance and liability protection. Even if a nimble startup builds a slightly better AI spreadsheet tool, Microsoft will just clone the feature. And I believe that's what Microsoft will repetitively do. They'll adopt AI's newest features and sell them, but they'll do it in ways AI can't replicate. That is, with 30 years of security and legal compliance history that giant corporations can trust. Overall, AI isn't going to replace Microsoft. AI is just a feature that Microsoft is going to weaponize to charge its sticky customers even more money. While the rest of the world is completely distracted by the current AI craze, Microsoft may already be winning the next big tech race in quantum computing. Quantum computers are futuristic machines that will solve some of our biggest problems in seconds, where today's computers would take thousands of years. It's expected to be the next evolution of computing, and for the past 20 years, Microsoft has played a leading role in quantum computing research. While quantum competitors are struggling with machines that constantly crash, Microsoft just announced a major breakthrough, the Majorana 2 chip, that makes these futuristic computers incredibly stable. They are now on track to have a commercially useful quantum computer by 2029. So in regards to the SaaSpocalypse, last time I checked, dying software companies aren't leading the charge in next-gen tech. So should you invest in Microsoft stock? To wrap it all up, calling Microsoft just a software company is a lot like calling Amazon just a bookstore. It completely misses the big picture. Yes, Microsoft still makes Word, Excel, and the essential software that 99% of the corporate world relies on. But today, that legacy software is simply the cash printing engine funding their massive AI and next-gen tech growth engines. If Wall Street wants to get spooked by the cost of data centers or panic that AI is going to kill traditional software, let them. But for everyday investors who are willing to zoom out, this could be an extremely rare opportunity. If you want to see exactly how I'm positioning into Microsoft in real time, stay tuned for more updates. I'm working hard daily to provide you with the best investment ideas and analysis, so if you found this research helpful, please like and subscribe to stay ahead of the curve. Thanks for watching and stay tuned for more stock market analysis.